The Genting Group, the well-known resort company that owns multiple subsidiaries, including Genting Malaysia, Genting Singapore, Genting Plantation, and Genting Energy. While the company Genting Berhad was founded in 1965 by Tan Sri Lim Kotong, who started the journey of building a mountaintop resort in Malaysia. Genting Singapore Limited was listed in the SGX in year 2005 with 52% of shareholdings owned by the Genting Berhad. Today, Genting Singapore G13 is a constituent stock in the Straits Times Index (STI) with more than $10 billion market capitalization. If you have ever traveled to Singapore, you must have visited the popular tourist attraction, the Sentosa Island, where you will find the Universal Studios Singapore, Sea Aquarium, Resort World Sentosa, casino, and hotels. If you bought the Genting stock at its IPO price at 32 cents in year 2005, your portfolio would have appreciated by 2.6 times after 15 years. The peak price was more than $2 in year 2010, and then it was a kind of a downward trend. However, not to forget that Genting is considered a dividend stock. It started giving out dividend to its shareholders since year 2012. In the last 2 years, the dividend yield was as good as 4.12%. With the pandemic impact this year, Genting still giving out dividend but slashed to only 2.94%. Obviously, COVID-19 global pandemic disrupted the operation of the travel and tourism industry. Genting stock price went down to 51 cents in March 2020 when Singapore announced its circuit breaker. At the same time, it also means a huge discount if you manage to catch the opportunity. The first half of the year was a difficult time for Genting Singapore, suffered a total net loss of $117 million. Almost all businesses, including the USS, Sea Aquarium, Adventure Cove Water Park, casino, and hotels, were shut down temporarily during the circuit breaker. Its businesses reopened as Singapore entered Phase 2 of circuit breaker starting from 1st of July 2020 with stringent safety measures in play. The company continued experiencing weak demand but with little positive result at $54,000 net profit in the third quarter of the year. Despite lower revenue and profit this year, the company is having a strong balance sheet position to sustain through the crisis. To reduce the cash burn rate, Genting Singapore had a one-off retrenchment in July and also implemented pay cut across the board. Though there is significant reduction on the arrival of foreign visitors, some of the Resort World Sentosa hotels are used as stay-home notice facilities. Currently, with little to zero community cases, surely those places of interest look attractive to the locals who are unable to travel overseas during this festive season and long weekends. What are the plus points of holding Genting stock? Firstly, this is one of the blue chips that have stable earnings as in the track record. Of course, it doesn't mean the same in the near future due to the uncertainty of the global pandemic. Secondly, this is one of the top dividend stocks that's still giving out dividend to shareholders during difficult times. Thirdly, the recovery of travel and tourism industry in the near future. Singapore is slowly opening up its borders for business travel with selected countries such as Japan, China, and South Korea, and the unilateral opening of borders to New Zealand and Brunei. Now, with the free vaccine offered to all Singaporeans and long-term residents, I am hopeful to see the vibrant city to live up again.